Real-time daily trend ideas. A warm welcome. It's Tuesday, 6th of February 2018. Let's have a nice start like every day. We have 5 days a week, 5 different traders. We will speak about trading ideas, strategies, market screening, and maybe 1 or 2 questions of your side directly answered in our webinar. Our goal is quick and smart, but for that daily, 15 to 20 minutes. So let's start. Good morning from Admiral Markets Berlin office. Yeah, we will start like always with a risk disclaimer. Forex and CFDs are leveraged products and can result in losses that exceed your deposits. If you are a starter in Forex and CFD trading, please start with a demo account and make yourself familiar with your personal trading ideas, long and short trading, and your personal risk management. You can read the full risk disclaimer at our web pages, for example, admiralmarkets.com. Just visit them and make yourself familiar also with all that. This is me. My name is Jens. My English is made in Germany, but hopefully some of my quality too. But I'm not the main speaker. The main speaker is the day trader of today. Today it will be Paul. This is our scheme. Usually on Monday it's Jay's day, on Tuesday it's Paul's day, on Wednesday it's Mike's day, on the net it's Thursday's day, and on Friday it's Dirk's day. Our leading day traders live. Today's actions are tomorrow results. Yeah, and of course we would be happy if you trade Forex and CFDs with us. You will get a lot of benefits only at Admiral Markets. For example, usually typical fixed spread of just 0.8 points at DAX 30, one of our bestseller. You can start already index trading with mini lots from 0.1 lots, and you have a choosable leverage up to 500. All details about that also at admiralmarkets.com. Also on our webpage you will find our valuable background if you like to see that, or you can contact us by phone, by email, or visit all the other channels where we are available. For example, YouTube. Most of our webinars are recorded and a couple of hours later to find on our YouTube channel. That was enough from my side, and now it's time to get to Paul. Hi, good morning, Paul. Your view to the markets. Let's start.
Good morning, Jens. Good morning, everybody. Thank you. Thank you for that, Jens. Good morning. I hope you can all see my screen. I hope you can all hear my voice. We're starting on time this week. Fantastic. It's a good start. So, ladies and gentlemen, that's been quite a couple of days we've had over, well, since pretty much since last week, since Friday in particular. So it would be remiss of me not to actually go through, what we've saw from sort of Sunday night through yesterday, what we've seen a little bit of this morning, and what can we do? What can we do to make that an opportunity for ourselves? So, for those of you, who are new to trading, hopefully you can see my screen there. And here I just have a very simple market overview screen, the profile on the Admiral Supreme Edition MetaTrader 4. And what I've got here is a mix of, let's say, the sort of major indices that I would particularly like to look at. So here on the top left, I have the Dow Jones, I have the S&P 500, I have the NASDAQ, I have gold there as well. And then down here in the bottom left, I've got the DAX, I've got the FTSE 100, and also the Nikkei. Okay, so you wouldn't need to be a seasoned market commentator to have a quick look at those charts and realize that there has been quite a sort of a big sell-off the last couple of days. All right, it's been quite an eventful day. I did a little bit of reading up and a few stats looking at it. So yesterday was the biggest points drop in history on the Dow, not percentage, but points drop. And I think at one point it was looking at it was a sort of a traded at one stage down about 1,600 points in the day. And what we're looking at is, since kind of that high of around about 26,700, okay, we've been down about 3,900 points, or between about 3,500, 3,900 points over the last week, depending upon where you're taking your broker feed from. Either way, it's been a bit of a challenging day if you've been a long-term investor. But ultimately, we're traders, okay? We're traders. What we need to do is to see, whatever that market is doing, okay, we need to find, where is that opportunity for us. I talk greatly about us being versatile traders, all right? So a versatile trader to be able to effectively, be able to trade any instrument in any direction on any time frame. We need to have those skills, even though we may finesse it and we may find our own particular niches that work best for us. we need to have those kind of skills and abilities to really turn whatever the market does into an opportunity for ourselves. So I'll just before I have a quick look at the Dow, we'll just have a little look at a couple of these questions that have shot up. So we're talking about risk on, risk off currencies: Aussie yen, euro yen, and euro sterling. Okay, so thanks for that. What I'll do is I'll go through them a little bit, and then in a little bit of time at the end, we'll quickly take a look at those to help you out. So have a look at the Dow. Normally what we talk about in all kind of trading slang, all right, would be turnaround Tuesday, all right. Invariably, whatever the market done, we'd expect a bit of a turnaround on a Tuesday. Well, it might be today. We might be talking about whether it's a dead cat bounce Tuesday, all right. So for those of you who are completely new to trading, when they talk about a dead cat bounce, it's even a cat will bounce if you drop it from a high enough level. So a little bit untoward, but it's hopefully you get the sentiment of it. So let's have a look at this. Let's have a look at this Dow here, because I've got kind of a couple of big trade ideas, a couple of small ones, and then a couple of suggestions about how you can turn this into opportunity. All right. So Dow here, daily chart. Green bullish candles, red bearish candles, a blue 20 period moving average, a red 50, a green 200. Very, very simple. Also fractals on there, which you might be able to see as well. You can see pretty clearly that, we've been in a lovely uptrend that got broken pretty ruthlessly, all right, at the end of last week, and we've fallen down there and fallen pretty hard. But you can already start to see that, this is representing, the kind of the sort of 24 rolling contract, but we'll look at the DAX in a moment to get a sort of up-to-date European insight. But we can see that we've already had a little bit of a bounce up, which we'll take, and that's what I started to sort of get interested in, because what I want to see is, well, is this a bit of a dead cat bounce, or is this an opportunity to sort of buy the dip? And in which case, how do I look to trade that? So I know some of you use a Fibonacci tool, so I'd be effectively looking to use very simply from the low of yesterday to the high of pretty much last week. There we go. So there, I have a bit of a range, and it's quite some range. Okay, it's quite some range. I'll just tidy this up a little bit if I may. And what I start to look at is, okay, we've had clearly a little bit of a bounce, but what I'm interested to see is, are we going to have a strong bounce, and will that give me an opportunity to sort of to take a trade? In particular, what I'm kind of interested to see is, I'm interested here, we've got the daily 50 period moving average here, which is in between the kind of the 50 and the 62% retracement. And what I start to get interested in then is, I'm just going to use the tools on here to draw just a very simple sort of triangle, very simple rectangle there. And that starts to become an area of interest for me, ladies and gentlemen. That starts to sort of, get me that little rectangle there is to give me a bit of an insight as to, that's an area I want to have a look at, because that might be an area that, we'll see whether this is an opportunity to buy the dip, or whether this is just a dead cat bounce and we're going to start to move down again. So what I'll be looking to doing, okay, on the Dow is, I have a longer term trade here. This is kind of a big trade, all right. I appreciate some of you, it might be a little bit of a sort of a bigger sort of scale than some of you used to. Don't worry, I'm going to show you how to take the big trade and the small trade. So actually, before I was doing my analysis, I used the fantastic sort of mini terminal on the ladder on the Supreme Edition to have, just a sell order, just basically placing a sell order here. It's around about the kind of 24,900 level. I've got my stop above that kind of daily 200 there, around about the sort of 26,173 level. That gives me a trade risk of about 1,200, just under 1,300 points. As I said, this is a big trade. We're going to break it down. And then actually what I'll be looking for is just, an extension towards, the 127 level right there, which is around, I've got a target in there around about 22,170. Gives me a possible profit target of about 2,700 points, giving me about 2.1, 2.2 reward to risk. That's a big trade, and I appreciate that might not necessarily be the too big for you, but here's how we break it down. I would break it down into a smaller trade opportunity that, let's say more intraday traders can look to use that. So what I'm going to be looking at doing is, when I see price, see if it'll retrace back to that level, into that rectangle. What I'm going to be particularly looking for is, will there be any bearish engulfing candles or reverse candles down on something like the 4-hour or the 1-hour chart? Okay, if I just go down a little bit here. What I'll be doing is watching to see whether it can get up there, okay, in which case, if it does give me bearish engulfing candles around there, then I'm going to look to be a seller. I'm going to look to be a seller with the stop just above it, and I have a very, very tight move in it. What am I looking for? Well, let me just draw this in here, okay? Let's just draw this in. What I'm looking for is actually just a very simple sort of ABCD pattern, okay? Just very, very simple. Okay, we have A at the top, B here, up to C, down to D being the 1, 2, 7. Just a very, very simple pattern. Very, very simple pattern. I'll be interested to see if that sort of, can roll its way up there and fall into that. So that's, just an idea. Have a look, keep an eye on that level. This afternoon we're going to see some sort of levels starting to pop up. All right, some movement will happen, and then that will give us an opportunity as we see fit. And the interesting thing is, ladies and gentlemen, is that if you look across all of those indices at the moment, that kind of idea starts to hold, firm. Let's have a little look at the DAX. Once again, here's the daily chart. Okay, the daily chart. We've had a great sell-off, but you can already see today. Okay, you can already see today that we've had a little bit of a bounce, and you can see that I've already drawn in that rectangle area, okay, that roundabout, 50 to 62, okay, retracement from, sort of the lows, all right, moving up towards there. What also kind of interests me is, here we have the daily 200 period moving average, which, we can see is normally, it's a bit of a self-fulfilling prophecy, and, we can actually see that the last time there was price reaction there. So I'm kind of, once again, my plan is, okay, I'm just going to watch and wait, all right, and see price move up towards that level. And then if I get, bearish engulfing candles, a very strong bearish candle pattern, then I'm going to look to be a seller. And once again, I'm going to look to be sort of moving down towards around about that 127 area, the 127 extension. Just a simple ABCD, but waiting to see if I can get a smaller, tighter, more elegant entry on the 1-hour candle that will actually give us some sort of opportunity to take a very, very good reward to risk trade. You can see this morning, okay, we had a little bit of overnight, sort of a bit of a dead cat bounce. We've had an open this morning, we've pushed up. And as I said, I'm just going to be waiting to see, will the American markets, okay, this afternoon drag us into that zone, all right? And if we're in that zone, well, then actually, then I'm going to be looking to be a seller on any good, strong engulfing, bearish engulfing, or just bearish patterns in the area down around about the 30-minute chart, 1 hour, maybe even the 4-hour chart, just waiting to see what occurs. So there we have. There's a couple of examples, and as I said, you can quite literally look at this across all charts, all right, all of the indices, all right, at the moment. There we have it on the FTSE, okay, you have it on the FTSE there. Just watch it, identify where that zone is, watch to see price move towards that zone, okay, and then see, do we get bearish engulfing candles? Do we get other bearish patterns that give us an opportunity to sort of join what could be, the next leg, all right? We'll have to, we shall wait and see. I think it's going to be an interesting afternoon. So I know a few of you will be thinking, well, do you know what, Paul? I actually, I think that that was just overdone yesterday, all right? And I want an opportunity to be a buyer. I think, I think long term, this is an opportunity to buy the dip. So fair enough. This is what makes a market. We have sellers on one side, buyers on the other. Here we have a little look at the Nikkei. Okay, it's on. You can see that the price action across all of those indices. They're so well correlated these days that actually you can see what's happened there. Okay, this is my personal bugbear here. I trade on a Sunday evening. I ended up trading for sort of about 10 o'clock Sunday night UK time through till about 3 in the morning, sort of Monday morning, because there was so much activity. And I was chatting to one of my trading colleagues saying, I think actually the Nikkei should be is ripe for a sell, and invariably it wasn't within my plan, and I sort of was very disciplined, but invariably that discipline meant I missed that huge big drop. But let's have a look at a plan for maybe to be a buyer. Price has dropped. It's hit the daily 200. Some of you, as I said, might be saying, well, do you know what, Paul? This is a chance for me to be a buyer. I want to be a buyer on the dip. So I still think there's a move up. So if we go down to the 30-minute chart, okay, this is the 30-minute chart of the Nikkei, all right, and invariably, what I was looking at here is, we sort of have a, I think there's a possibility of there might be a possibility of an inverse head and shoulders pattern starting to form here. Hopefully you can see that here. We have the left shoulder here, and we've got the sort of the low of the head for an inverse one down here. We've had that bounce there. Okay, we've had that bounce, and then it starts to become a case of, right, well, Paul's going to be a little bit of how I would describe it as an aggressive tester, okay, in terms of, looking at where that left shoulder level is to actually to be a buyer there, okay, buyer in that area. I think I wrote it down here as I put the trade on before, around about the kind of 21,000 sort of 437 level. My stop beneath that low around about 21,045 gives me just under 400 points of trade risk. Where would my target be? Well, hopefully you can still see we have this. Here we go. Let's draw it in here. Okay. We have a gap here. Okay. There's a gap that still hasn't been filled. So that makes for a nice natural target for me. Remember, I talked weeks ago about how, gaps are like vacuums. Nature abhors a vacuum, so it draws the market towards it. All right. So that would be a target of up around there, about just under 23,000, 22,900. It's gives us sort of a reward to risk of around about 1,500 points, giving me sort of about 3.6, 3.7 reward to risk. That's it's a worthy trade for me. That's a trade for me able to test, and it gives me that idea that, well, if it does come down and bounce, well, maybe the selling was a little overdone. Maybe we'll have a little bit of a leg up, okay. And as I said, it really doesn't matter too much about what those markets do. It's about, can we turn that into an opportunity? So just finishing there on the Nikkei, that gives me a good example. Just the last couple of minutes to sort of switch across to the yen, because I want to have a quick look at that. And I see we had a few questions about that. All right. So DAX short for today asks Eric, well, as I just said there before, Eric, I'd be waiting to see if it gets up to that zone I want to see price move to, and if it does, and it provides with bearish bearish reversal candles, I'd look to be taking a short trader there at that particular zone. So let's see if I can just flick across and see if I've got, I have a yen profile here. Okay, I know some of you are talking about the risk on, risk off currencies. Okay, let's have a look. So let's just, here we go. So, those of you who will have seen us talk over the weeks and months we've been running this, has been a case about, we talked about the effects of quantitative easing, how that kind of a correlation, inverse correlations between currencies and indices. So, what we've seen is, an interesting point, as I said, the Nikkei, along with all the other indexes, have sold off pretty strongly. And invariably, we've had a little bit of a move in towards the safe haven currencies. So, for the last few months, the Japanese yen, along with the US dollar, have been the bottom of the sort of the strength matrix. You've heard me talk about it before in time in FX markets. I want to be a buyer of strength, seller of weakness. And for the last couple of months, yen and dollar have been the bottom of the barrel. All right, they have been the weakest. However, the yen also acts as a safe haven currency. And what we have here is an interesting point over the last couple of days where we've seen strength come back into the yen. This is a yen profile, very simple to set up on the Admiral MetaTrader. Okay, I've got here euro yen, all right, I've got dollar yen, pound yen, Swiss yen, Aussie yen, Kiwi yen, CAD yen, and then the Nikkei there. So when I bring up this profile, in one quick glance, I can get a good picture of what is going on with the yen, all right, or the Japanese, and that's it gives me an idea. I get to start to see correlations. One of the things I'm interested in, and I might have mentioned this before, here's the dollar yen. Dollar yen on the weekly chart. Hopefully you can see that is one big triangle that is forming there. Okay, I see that as an element of compression happening. Okay, it's like a coiled spring. All right, it's like a coiled spring waiting to happen. Now, what I would have been normally saying is that, I've been looking at this particular level here. Let me move my tools out of the way so I can describe it better for yourselves. Is that, here about, round about this 109 level, okay, 109 down to 107, okay, this zone here I'd be interested in. Let me just draw in a little rectangle there for you, ladies and gentlemen, just to What I'm going to be looking at is, kind of interested in there. If we get a break beneath it, we've got a long-term sort of support level. We also have the support trend line of this bigger trend line. And, if we get a breakdown and hold, then I'd be looking, that would be an interesting point to be a seller of dollar yen. That would, of course, mean that we're getting yen strength, which would, not be unsurprising if we are having a bit of a move down. That's not unsurprising because there's money flowing into the safe havens. The only thing that might make it a little bit what's the word? Might cause it a bit of resistance in the terms of it moving down is invariably what we saw last time is the US dollar becomes a little bit of a safe haven. Capital is a coward. It will run and hide, okay, in the safest place at the first sign of trouble. And back, those of us who remember back in from the great financial crash back in 2007, 2008, 2009, that was actually strong for the dollar because money flowed in because people bought treasuries, they bought US bonds. So that might be the only thing that would cause a little bit of friction. It's probably a better word than resistance. But what I'm looking at is dollar yen, big weekly charts coiling up. And as I said, if it breaks that kind of around about 108 level, all right, and starts to hold beneath it on weekly and daily, that would give me an indication that I'd be looking for to be short dollar yen, moving down to around about that 100 level. Okay, it's a big significant number. So Aussie yen, some people asked to have a quick look at. They looked at that. All right, well, let's have a little look at this. Once again, it's what are we seeing there? What are we seeing there? The last few days we've seen yen strength, Aussie weakness. It's noticeable that Aussie's been slammed last week. Okay, Aussie has been slammed. It had been doing well for the couple of months beforehand, but over the last week or so, and if you look at Aussie across the board, Aussie's been rugby tackled. I know we have the Six Nations on. Aussie has been the rugby tackled and knocked to the ground. Okay, and that has so what we're having is over the last few days we're seeing an element of Aussie weakness, yen strength. All right, so I would keeping an eye on that. Okay, that once again might be an opportunity if there's I'll be looking pull back around about that 86 level. Okay, looking at does price get up there? Does it then give me some bearish patterns that might be allowing me an opportunity to sort of take a short trade back down towards that 84.30 level. Okay, so I apologize, yen. I've overrun there a little bit. Clearly, an awful lot to get through today. If there's time and interest, I'll take one or two more questions. But I appreciate it's been an eventful week so far, and I just wanted to try and give you as much of a flavour and as an insight into what could turn out to be an interesting week, ladies and gentlemen.
Yeah, thrilling week, but our goal is clear, 15 to 20 minutes, so the time is our borderline for today. Thanks a lot. Tomorrow is another day. Every day you have chances and risks on the stock and Forex and CFD markets, so let's see how the day goes today and what's tomorrow. Tomorrow it's Mike's day, so hope to see you also again, anybody in the next webinar in 24 hours. See you, have a good day and good trades. Bye-bye from Berlin office.